Shares in Microsoft fell on Tuesday after it reported a slowdown in parts of its business, despite heavy investments in artificial intelligence. The tech giant's earnings beat market expectations with more than $56 billion in revenue, but its latest report showed a slowdown in growth for its cloud service Azure. It also laid out an aggressive spending plan to expand data centers to support AI. Google parent Alphabet, on the other hand, rose in after-hours trading, as second quarter profits exceeded expectations, partly thanks to the steady demand for its cloud services as well as growth in ad revenues. The earnings report comes at a time when tech firms are heavily invested in the AI arms race. For more on this now, let's go to Naeem Aslam in London. He's Chief Investment Officer at Zay Capital Markets. Naeem, let's start with Microsoft. All this rapid spending on AI, when will we see it pay off? Are analysts right in being cautious about growth plans?
Sure, thanks for having me. Look, I think AI is a bit of a long-term plan for these particular companies, which are heavily involved, as you correctly mentioned. But, you know, as you mentioned, yes, Microsoft stock tanked and Alphabet stock surged. What should we do? I mean, is this a point where investors should be saying, you know what, cloud revenue or other revenue margins for Microsoft weren't as great as many were expecting, despite the stellar numbers that they've produced. But I take completely the opposite side of that argument. I think the margin's going to be immensely healthy, and the revenue on the AI space for Microsoft, again, is going to be very, very handsome. And that is the reason that the company has heavily invested in. So from where we sit, I think if there is any weakness in any of these Magnificent Seven stocks, including Amazon and Apple, which will be reporting today and tomorrow respectively, I think this would be only an opportunity to buy them, because the long-term trend and the fundamentals on the AI space and how it is going to change the overall environment remains really strong. So weakness would be a great opportunity to buy low and sell high.
Right, and how is Alphabet navigating the AI landscape amid this fierce competition?
Sure. So when it comes to Alphabet, look, what other businesses the company is involved in? Yes, the cloud business was really great. Yes, the advertisement business was pretty decent as well. The cost of acquisition for advertisement was significantly higher. But I am more focused when it comes to Alphabet, its investment in driverless or in automation softwares for cars. I am more focused when it comes to Alphabet health diagnostic business that it is heavily getting involved in. Imagine the data that the company already holds on that, and the data that it will have and what it can do on the back of that.
Naeem Aslam there in London. Thank you for your analysis.
Thanks for having me.
Now to other top stories from around the world. US regional bank PacWest has agreed to merge with its smaller rival, Bank of California, as the collapse of Silicon Valley Bank continues to reshape the industry. The lenders will also sell $400 million of new shares to private equity firms in a bid to shore up their balance sheets. The merger will create a bank with $36 billion in assets. Deutsche Bank has reported a slump in second quarter earnings, even as higher interest rates boosted gains at its retail unit. Net profit plunged 27% from a year ago to $842 million, driven by a sharper than expected fall in investment bank revenues. The German lender has also warned of the need for cost cuts in a bid to offset the impact of inflation. And Japan is facing a severe population decline, with its 47 prefectures posting a drop in 2022. According to newly released government data, death numbers hit a record high of more than 1.5 million, while there were just 771,000 births last year. And for the first time since records began, the number of newborns fell below 800,000. Japan's Prime Minister Fumio Kishida called the trend a crisis.